Good morning and happy Monday to you. You're watching Trade Talk on BQ Prime. My name is Alex Matthew, and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Well, it's bright and early on Monday morning, and
Not for the markets, though,
not for the
probably.
markets. We're just half an hour away from trade, and as things stand, it looks like it's going to be a negative start. But then let's put that in context. You had quite the down day on Friday. It was a bit of a bruiser for the Indian equity markets, and that is after we came just shy of that 20,000 mark. We ended up losing quite a bit of ground in trade on Friday. It was the breaking of a 6-day gaining streak, Hiral, and it was the IT pack as a whole that proved to be the biggest weight for the Nifty going down. 4% lost.
Absolutely. And this was mainly on the back of Infosys, right? The earnings disappointment, specifically from a guidance perspective, is something which brought the entire IT pack down. And this is not only the large cap companies, even the mid cap companies lower. Today, it's probably Reliance Industries, which is going to play small sport as well. Because if you talk about the GDR, 6 to 6.5% kind of cuts is what we saw in evening session in terms of Friday. Now, that could be mirrored in our trade as well. Clearly, 191 points is what Nifty has paid from life highs of 19,991 in trade overall. Apart from that, now this week, what is going to be crucial is, Alex, the US Fed as well as the the ECB policy meeting. And on the back of earnings, a lot of stock-specific action is what we are going to watch out for. If you talk about the technical perspective, if we are going to continue to stay below that 19,825 mark, the weak sentiment is expected to continue, and then we could slip to levels of 19,600 to 19,550 kind of a zone. However, if you're able to stay above those 19,825 levels, then there is a possibility of an uptrend to continue in terms of markets, and 19,900 to 19,950 is something that could be retested. It's interesting how now everyone is again stopped talking about 20,000 as the key resistance, and we've come back to those 19,900 to 19,950 levels. If you see in terms of Bank Nifty as well, around 45,800 to 45,500 is the key level to watch out for. And index could move to around 46,500 to 46,900 if there is that upsurge that continues. And now, the participation with Bank Nifty is going to be absolutely crucial because all bets were on IT and Bank Nifty to help the index scale above those 25,000 levels and sustain above that. If you talk about the F&O side of it as well, 19,800 on the put side is seeing the highest OI addition, whereas on the call side, it's still 19,900. So that shift has already happened, which was earlier at those 20,000 levels. So it's going to be an interesting day of trade. How far are we in terms of number of days from 20,000 is what we need to wait and watch, whether this expiry we will be able to take it out or not.
And speaking of Reliance Industries, which, as you pointed out at the start, is the focus today. By the way, on Friday as well, it lost about 2.5%. So it was quite a bit of a drag on Friday as well. Today as well, that could be the case. It could be mitigated somewhat by the likes of ICICI Bank, which posted quite a good.
Correct. But you know what has happened is, if you talk about Reliance Industries, the month of July itself, it's seen a good rally, right? Now, due to that rally, will we see a higher amount of profit booking now is what we need to wait.
In fact, let's look at the numbers more closely, because that ultimately is what's going to determine the mood for Reliance Industries today. Sajit is joining in. The headline seems to be that it's a miss, Sajit, on the bottom line front, and that's primarily on account of O2C, is what I have read. What can you tell us?
Good morning, Alex.
Good morning.
It's pretty much a miss in terms of numbers, whether on a consolidated basis, and OT's oil to chemical is one of the reasons why, because they had a very muted quarter in Q1. If you look at EBITDA, consolidated EBITDA, it was a miss, especially due to O2C weaknesses. There was lower deltas, and that led to lower EBITDA for the OTC business. But this was partly offset by the consumer businesses like retail and Geo, which is the telecom business, which is there. Consolidated profit was again lower, 17%. This is profit attributed to owners. and this was only on account of higher finance cost as well as depreciation which was booked in the quarter. Geo revenues and EBITDA was up 3%, which was very in line kind of numbers which came in there. Subscriber addition was nearly 2% odd, and ARPUs were in line with at 180.5. The street was looking at 181 or so. There is still some consolidation happening, so that's impacting Geo there. Retail was good performance coming in. You had revenue and EBITDA from all segments, especially grocery and fashion, and the rising quantum of the digital or e-commerce business, which is also contributing to the retail there. But the street seems to be a little divided on the growth of retail, because they've been able to increase the footprint by nearly 55% in the last 1 year on a year-to-year basis to 70.6%, and that's not coming is that growth in Q1 is not commensurate to that increase in footprint, though it is a good growth they have come out with. So consensus target is around 2716 as per Bloomberg. Currently the stock is hovering around 2500 odd and is going to be under pressure today.
Absolutely, pressure is going to continue, and what's the kind of pressure it has on Nifty 50 is going to be interesting to watch out for. Thank you, Sajid, for getting us the details. So that's what Reliance Industries. In fact, we will have Probal Sen as well, who will be joining us at the lag end of the show to give us a perspective in terms of what it would mean from a valuation perspective, as well as from a target perspective on a Reliance Industries and what you should be doing with the stock from here on. But moving on, two banking counters that are in focus as well from the large cap space. You have, Vishy joining us to get us more. Vishy, you have ICICI Bank as well as Kotak that has reported numbers. Firstly, let's start with the ICICI Bank, because clearly, firstly, it's already hit a 4-digit number in terms of last week, and that was a good milestone for the bank to cross. From an earnings perspective, how has the quarter been?
Yeah, as far as ICICI Bank is concerned, of course, there's been a significant profit growth, about 40% increase in the net profit number for the first quarter on a year-on-year basis. It has beaten all market estimates as far as I know. Having said that, this is largely because of an improvement on the net interest income side. So that also improved about 38% for the bank, which has helped ICICI Bank's overall profitability. Advanced the deposit growth both at about 18% at ICICI. Only two things which was slightly disappointing is one on the asset quality front, where the additional NPAs that were added during the quarter, about 1,800 odd crore worth of slippages, net slippages added, after removing any kinds of recoveries and upgrades. That was a slight miss. The ICICI Bank management has been constantly pointing out that this happens in the first quarter because you account for any agri NPAs that come in. And agri NPAs have been an issue for private banks for a very long time. This specifically came from, bulk of these NPAs came from the Kisan credit card portfolio. After the asset quality, the other disappointing bit was on the net interest margin side. Now, of course, ICICI Bank has previously, given this guidance that NIMs are going to come down because you had a significant uptick in NIM of 4.9% as of March 2023. That was largely because the interest rate differential between lending rates and deposit rates were not moving in tandem. So now that deposits are getting repriced, the NIM has dropped over 4.78%. The bank believes that there's going to be further compression, but things will normalize at close to about 4.5% for this financial year.
Right. Okay. So that's the view, Vishy, on ICICI Bank. Kotak Mahindra Bank was the other one, and at least the headline looks really, really pretty, right? 66.6% growth in net profit on the back of improvement in net interest income and also non-fund income. It's looking good. What can you tell us about the fine print?
Yeah, so as far as Kotak Mahindra Bank goes, you're right, the profitability numbers look pretty good. Even if on the advances and deposit side, it's growing at about 19% and 22% advances and deposits respectively. Deposits have picked up pace at Kotak Mahindra Bank because, of course, advances growth has been strong for the last few quarters. So they need to push up the deposit side now. The disappointing bit is, of course, CASA is not growing as fast. And this typically happens in a rising interest rate scenario where people move the deposits from their CASA to the fixed deposit side. For Kotak Mahindra Bank, the fixed deposits have grown about 48.5%. So that shows that that shift is happening because people are booking higher interest rates. On the asset quality front, the bank did see some slippages coming from the unsecured portfolio as well as its commercial vehicle book. So that the bank believes is going to normalize going ahead. This was a slight disappointment on the asset quality front, but overall, Kotak Mahindra Bank, just like ICICI, looking pretty strong, Alex.
Thanks, Vishy, for getting us the details. So, in fact, both these counters will be in focus. In fact, Kotak Mahindra Bank itself as a stock has been one of the underperformers from Bank Nifty components. Now, whether it starts contributing to Bank Nifty's up move is what we need to wait and watch, and whether the contribution starts supporting Nifty as well. But moving on, a lot of other financial names that reported numbers as well over the weekend. We have Himansh who's joining us to give us more. Himansh, good morning.
Good morning.
A lot of other financial institutions that have reported numbers, which ones are you tracking?
Right. So a bunch of them have reported their numbers. Starting with AU Bank, reported a 44% year-on-year growth in net earnings, which were largely in line and were aided by a healthy growth in the net interest income, which grew by 28% year-on-year. Despite the seasonally soft quarter and elevated interest rates, the net interest margin was impacted by 38 basis points on a quarter-on-quarter basis. And the deposit cost and the drag from excess liquidity were the key factors here. CASA mix moderated to 35%, and the absolute and gross and net NPAs increased by 14% and 42% quarter-on-quarter. Coming on to then Credit Access Grameen, the net interest income was up 65.4%, and the net profit jumped up by 151.5% year-on-year. And this was backed by the 40% growth in the gross loan portfolio, along with which grew to 21.8 thousand crores, along with a borrower base increase across the 1,800 branches. So deep, rural penetration that this MFI enjoys. And this, coupled with the 98.7% collection efficiency, has largely driven these results. Then coming on to Paytm, their revenues were up 39% year-on-year. And the prospects of the payment business also improved with a 69% year-on-year increase in the payment margin, which is a composite of both your both payment processing margin as well as the subscription revenue. There's also a marked improvement in the loan disbursements business, which have grown by 167% year-on-year. This is largely driven by the merchant and personal loans, which while postpaid loans remain the foundation on which this segment is built upon. RBL Bank, which noted a net profit growth of 43% year-on-year and standing at 288 crores. The bank noted a sequential decline in the net interest margin of 4.84%, while the net NPAs have continued to remain stable at 1%. Asset quality has also improved, and the net NPAs stand at 3.1%. Lastly, with Yes Bank, the net profit is up 10.3%, and the bank's the analysts polled by Bloomberg estimated a 263 crore net profit for the 3 months, which is beaten by the net profit reported of 342 crores. Lastly, while the bank's total deposits have registered a growth of 13.5% year-on-year, its CASA ratio, the share of mix between current account and savings account compared to overall deposits, that have declined by 29.4% year-on-year. So that's the summation of all the earnings wrap for the financial institutions.
All right, Himansh, thanks so much for that. Now, Reliance Industries, we mentioned at the start of the show, and we talked about the earnings fine print as well. And we told you that we'd be getting Probal Sen from ICICI Securities to tell you a little bit more about what he made of the numbers. Probal joining in. Probal, good morning, and thanks for joining us on BQ Prime. We've already taken our viewers through the fine print. The question is, what do you make of it? How did it stack up to your estimates? What we're looking at is a miss, at least on the bottom line number.
Yes, I think the bottom line number was a little bit of a miss because I think most of us were building in tax rates of somewhere around 20%, whereas they transitioned to the new tax rate of 25.2% almost completely this quarter. So frankly, on the net earnings level, maybe that was one of the reasons. Operationally, as you were mentioning, I think the numbers were broadly flat or marginally below street estimates. They were marginally below our estimates as well. because of small misses in retail and a couple of other segments. But the bigger, monitorable really is that what happens to the OTC segment, which was obviously a little bit of a laggard in this quarter. And if we look at the kind of guidance that has been given by the management, it does look that at least in the near term, the prospects for margins do seem a little bit muted. The it's a very strange situation right now in the downstream petroleum segment, where all the data that is coming through from agencies like IEA or OPEC or anybody else you want to read will suggest that inventories are at fairly low levels across OECD countries. Supply is not that much of a surplus. In fact, it's moving into a tight environment, and demand is still set to go stronger. And yet, none of that sort of reflects to that extent in the pricing, which suggests that either there's a downside risk to the estimates that everybody is making, or the demand estimates are probably a bit overestimated at this point of time. So we will have to basically see as we go along. At this point of time, I would say, if you look at the EBITDA that has been reported by the company and annualize it, you will see that it will fall short of street estimates by somewhere around 6 to 7%. So obviously, there's a little bit of a demand recovery that needs to happen, or earnings recovery that needs to happen over H2 for Reliance, and we are hopeful that that is something that's going to come through. But there is a little bit of a downside risk at this point of time.
Right. Thanks, Probal. In fact, good morning. What I want to ask you is, from here on, what are the key triggers we should be watching out for a Reliance Industries? Because clearly there are two aspects to look at. One is the monetization cycle of Reliance Industries, and the second part is the investment cycle. And both of them are now running in parallel for the company. So taking both these aspects into consideration, what would you advise investors to watch out for?
I think three things that probably will be of interest. Financial services now is no longer part of Reliance. So that is done and dusted. Shareholders have got the shares of financial services. So what happens to that entity is no longer relevant. For Reliance, I think what happens in the new energy businesses, both in terms of investment milestones that are disclosed by the company as we go along, plus any other milestones that are hit from a manufacturing or a cost standpoint, I think that will be one key trigger. As I mentioned, any signs of clear recovery in the OTC margin cycle, both on the refining as well as the petrochemical front, I think that will be another key trigger. Third, you mentioned the investment versus monetization cycle. The fact is that investments or capex for the company at around 39,000 crore is still higher and well above, I think, what people had built in when their cycle had ended in geo-mobility and downstream petroleum. So with this kind of a capex run rate, our sense is that FCF yields and return ratios will probably continue to be a bit muted, at least over the next 2 years. So it's important perhaps to understand what is the 5-year roadmap for monetization of all of the investments that are being done, both in 5G, new energy, as well as the new round of petrochemical investments that probably also will start from this year. And that was announced in the last AGM by Mr. Ambani. So, and of course, the most immediate trigger would be the upcoming AGM speech, because that will give us some color on, what the company plans to do strategically over the next year or so, both in the new energy as well as in the other segments. So those are the few factors that one should keep an eye out on.
Okay, final call, quick one then, Probal. How's call on Reliance Industries, and what is the target? And do you think there's likely to be quite a bit of pressure, at least in the near term? And would you pick up on dips then?
I would probably, we have an ad rating on the stock with a fair price of 26.70 a share, which obviously translates to a fairly limited upside from these levels. Yes, depending on what the extent of the downside is, anywhere around 2,400 bucks, if the stock goes down to that level, we would definitely be interested. But at these levels, we would say the risk reward is fairly balanced for the story.
Right. Thank you, Probal, so much for joining us on the show and sharing the views as well. So that's with regards to Reliance Industries. How it opens in trade is going to be interesting to watch out for. But a whole host of other earnings and smaller companies that are in focus in today's session as well. Mika joins us with more. Mika, which are the companies you've picked up on the back of earnings?
Okay, so first the CMS Infosystems, which recorded a 13% growth in revenue and a 22% growth in PAT. The cash logistics segment went up 12% in terms of revenue, and managed services and technology Solutions segment grew 17% year on year. Next, we have Titagarh Rail Systems, whose revenue grew 110.89% at 911 crores, and the net profit of the company stood at 68 crores this year versus the loss of 0.06 crores last year. The order book of the company stood at 27,890 crores with 51% in freight rolling orders and 49% in passenger rolling. Next, we have DLF, which recorded a marginal growth of 0.32% in revenue and 1% in EBITDA this quarter. However, their PAT grew 12%. Their new sales booking for the quarter stood at 2,040 crores. The company also expects strong demand from its office developments and has received around 82% of pre-leasing across its 2 new developments. Next, we have Indraprastha Gas, which had reported 6.5% revenue growth at 3,761.8 crores. EBITDA margins decreased to 17.07% this quarter versus last year's 17.48%, and PAT was up 8.4%. And lastly, we have Ramkrishna Forgings, which has 3 different updates. The first is the quarterly updates. Revenue was up 28% year on year, and PAT was up 53% year on year at 785.3 crores. The company has also increased its capacity to 210,990 tons and will commission another 32,500 tons addition by September 2023. It has also announced a strategic acquisition of Multitech Auto Private Limited and its wholly owned subsidiary Mal Metallics Private Limited, along with Mal Auto Products Private Limited. These acquisitions are aimed at expanding their current product line and increasing its presence in mainly passenger vehicles, light commercial vehicles, and heavy commercial vehicles as well. The company expects around a 500 to 600 crore turnover in the next 2 years via these acquisitions.
All right, thanks so much for that, Meka. Out of that entire list, I think that RK Forgings is one to watch, as well as Titagarh Wagons, considering that they've posted a PAT compared with the loss of last year, and also that entire rail stock or the rail basket, if you can call it that, has been in focus over the last couple of months.
And on both these counters are building a factory together as well in terms of manufacturing. So both of them are going to go pretty much hand in hand.
All right, there's more stocks that you need to watch out for, and Saloni is joining in to tell you all about that. Saloni, morning. What are you picking up?
Morning. So there are 4 other stocks that also reported their quarter 1 earnings. So first we've got Cyient DLM. So the total revenue from operations of the company was up 28% to rupees 217.15 crore in the first quarter. The EBITDA was also up 73%, and the PAT of the company was down 15% to rupees 5.36 crore. The other income fell by 7.5 crores to rupees 0.91 crores, driven by the drop in the net foreign forex gains. Then coming to Aarti Drugs next. So the total revenue from operations was up 6.3%, and the EBITDA was up 25.6%. The PAT was also up 27.9% to rupees 48 crores. The increase in sales was led by volume growth in APIs, which contributed to 79% of the total revenue from operations. In other news, the company has also approved the buyback of 6.65 lakh shares, which represents 0.72% of the total at rupees 900 per share. Next, we've got Tejas Networks. So the total revenue from operations was up 49.4% to rupees 187.89 crores. There was an EBITDA loss of rupees 26.79 crores, and the company saw a total net loss of rupees 26.29 crores. Lastly, we've got Dodla Dairy. So the total revenue from operations was up 14.8%, which was led by an increase in milk volumes and healthy value-added product sales. The EBITDA margin was up 33.9%, and the PAT was up 40.3% to rupees 35 crores. The improvement in the margins was led by low material prices and the decline in other expenses.
Right, so I think a lot to watch out for. Thank you, Saloni, for getting us all the details. But moving on, another counter which has reported numbers is Vedanta. It's interesting to see how the numbers have panned out, because with this, another aspect that everyone's talking about, Alex, is in terms of the stress that could come in terms of the balance sheet, because what's happening is to unburden or reduce the burden on the parent company, which is Vedanta PLC, the kind of dividend payouts that Vedanta is coming up with, that's what the banks and financial institutions are worried about, right? That how much pressure could it put on the balance sheet? So that's one aspect we need to consider. But Rishi standing by with more details in terms of how the numbers have been. Good morning, Rishi, and what does Vedanta tell you?
Good morning. So, as you said, that's one aspect. Even in the first quarter, it paid out about 6,800 crores worth of dividends, and that came out about 18.5 rupees per share. And this was again, as they also mentioned, it was to reduce the debt burden of its parent holding company, that is Vedanta Resources. Now, coming to its results, its revenue was down 12.6%, and it also missed estimates. And this was due to lower commodity prices as well as lower volumes that were posted by the company. And this was partially offset by higher premiums as well as a favorable exchange rate movement. Now, the net profit was also down 40% at 2,640 crores. And this was led by higher finance cost, apart from the already lower sales that was there. The overall EBITDA as well, it fell by 37%, and this was led by EBITDA declines across all of the segments year on year, except for its power segment. It is also important to look at its dividend payments that I just said, that is stressing its balance sheet. Now, the company is also planning to set up a semiconductor and display glass production facility at Dholera in Gujarat. Now, once it's operationalized, Vedanta has said that it would augment its product portfolio from being a metals and mining company to as well diversifying more to a technology aspect as well.
Okay, so that's, and we've spoken about that over the last couple of weeks as well. But Tata Steel is going to be posting its results. What can you tell us about the preview?
So it's not going to be a really good quarter for Tata Steel. Its profits, it's actually expected to post a loss of about 100 odd crores from a profit of over 7,000 crores that was there in the last year. Now, revenue is also expected to drop by over 11% in this quarter, and this will primarily be driven by lower steel prices, despite a 8% growth in its consolidated steel volumes that it said in its quarterly update. Now, profits may also get some support from lower costs, but the majority of the lower cost benefit is expected to come in only in the next quarter. So that impact will also be minimal. Now, the demand pickup in the Euro segment has continued to be weaker. So the underperformance in this segment will likely impact the company's EBITDA. But however, the company is also planning to increase its focus in the long steel segment, and Tata Steel's long products segment also posted its result recently, and its losses actually reduced. So it looks like the Indian operation segment will probably offset the losses that is there in the Europe segment.
Interesting.
So that's going to be the metal pack continues to remain in focus as well. Thank you, Rishi, for getting us all the details. But moving on, you have the pharma pack that will be in focus in today's session. We've already spoken about Aarti Drugs on the back of earnings, but apart from that, you know how you have names like Lupin, Dr. Reddy's that will be in focus. Monal joins us with more. Monal, what are the key pharma stocks that you will be tracking today? Because it seems there is some bit of action there.
Yes. So US FDA has again, so it's been going on, like the inspections have been going on. So now two of the companies have seen inspections and certain observations. So one is Biocon. Now Biocon had two inspections, good manufacturing inspections, the regular routine inspections that have taken place in its Malaysia insulin manufacturing facility. Now it's come up with 8 observations. So 6 of them, the company said, relate to drug substance, drug product units, and drug quality control laboratories, and 2 relate to delivery devices unit. Now, they've said that the observations are procedural. There is no data integrity issue, so to say, and there's no systemic non-compliance. But of course, now the company is going in for resolution, and we shall see what is the outcome. The second is Aurobindo. Its Bachupalli village facility, which is in Telangana, was also inspected. It's a formulation manufacturing facility, and that was inspected between 14th and 21st July. Now, 3 observations have been made, and the companies disclosed that they're procedural in nature. Of course, the outcome would be more clearer once we get the Form 483 that has been issued to the company, or we get some more insight. Let's wait on those. Then there's Lupin, which has received tentative approval for an AIDS relief drug, which was approved under the President's emergency plan. Now, this tentative approval is the second one, according to Antique Broking, which is after Laurus Labs. So maybe a slight negative for Laurus, because it's not the sole player. Also, they're expecting that more generics are to receive approval, maybe from Mylan, Hetero, or Aurobindo. This is all as per Antique Broking. And they're saying that because there are going to be so many players in the market, we need to gauge the materiality. The existing AIDS relief drug regimen, which is in focus, is around $600 million. But with generics coming into the picture, we need to see what sort of market share and what are the playouts and what sort of discounting do we see on the price of the drug as well. It's going to be manufactured at the Nagpur facility.
Okay, so quite a few updates in the pharma space. RT drugs we already spoke about. But interestingly, and thanks so much, Monal, for that. Interestingly, the buyback price that was announced, excuse me, 900 rupees, which is a considerable upside
on
to the
CMP,
closing on the closing on Friday. So we'll have to see how that pans out. Of course, the amount is not a very large amount, but we'll have to see how that stock reacts in trade. Quite a few other stocks that you want to watch out for, and Varsha is joining in to tell you more about what she's picked up. Morning, Varsha. What do you have for us?
So there are a bunch of companies that one needs to watch out. The first one is SJVN. So the company, through its wholly owned subsidiary SJVN Green Energy Limited, has received a letter of intent from Punjab State Power Corporation Limited for procurement of 1200 megawatt solar power. Now, the solar projects shall be developed on build, own and operate basis. The cost of construction for development of these is 1200 megawatt project is around almost 7,000 crores. And the next company that we have is Adani Enterprises. So global private equity firm Bain Capital has signed an agreement to buy 90% stake in Adani Capital Limited and Adani Housing Limited. The transaction involves Bain Capital investing almost 984 crores worth primary capital into the company. Gaurav Gupta, who currently owns 10% stake and act as a managing director and CEO of the company of Adani Capital, will retain his stake and role. The next company that we have is NHPC. The Arunachal Pradesh government has approved the allotment of 2,000 megawatt Subansiri Upper Hydro project and 1,800 megawatt Kamala project to the company. The next company that we have is Power Finance Corporation Limited, which executed various MOU of more than almost 2.37 lakh crores with 20 companies, both in public and private sector. And the last company that we have is IRB Infrastructure Developer, which is going to raise up to 2,860 crores via right issue.
Right. Thanks, Varsha, for getting us the details. And from all of this, it's SJVN, which is going to be in key focus on the back of the MOUs as well as order wins. But clearly, markets are indicating pressure, Alex. If you see the pre-open in terms of the Sensex as well, a 500 points cut is what we are already seeing. So how it looks like and where it settles in is something we need to wait and watch, and how far the journey to 20,000 becomes from here on. That's all that we have on this session. Thanks for watching, and lots more lined up during the day. Please stay tuned to BQ Prime.